Hello and welcome to this week's Market Outlook. This is Jeff Bish, president of MarketGauge.com, filling in for Keith Schneider for our weekly analysis of the markets. Now, in this week, I am going to focus on a little bit of a tour about what's going on around the world, because there's some pretty interesting market moves. But before I do that, I will cover the US as well. But first, if you've just found us on YouTube, please make sure to subscribe so that you can catch us each week. So let's take a look at what's going on around the world because of the interesting moves that have happened this week and really the beginning of this year. But before we can really put that into context, let's take a look at the key points in the US to keep your eye on. So I've got weekly charts up right now of the major US indexes, the SPYs in the upper left, the Qs in the upper right, and the Dow in the lower left, and the IWM in the lower right. If we just look at these weekly indexes, for me, there's one key point to focus on to know whether or not the market has finally had enough and we need to think about the downside. And I have it demarked as this trend line that is the bold trend line. It's a weekly trend line going back to the October 2014 lows. And essentially, I think if you look at these markets as having consolidated for a while, tried to move up, then consolidating again, if they break this trend line, then I think you got to start thinking a little bit more seriously about the downside. But until we do that, the consolidation should just be considered consolidation. Pullback should be considered pullbacks in a bull market. Now, this magenta line here is our 200-day moving average because this is a weekly chart. So we'll take a look at the daily charts in just a second. But if you take a look at these weekly trend lines on the Qs, we came right back down to it and bounced. If you look at it on IWM, right here, you're not even close. IWM is the strongest one. Keith has gone over this in prior weeks. I know it can seem kind of choppy, it can seem kind of weak, but for all intents and purposes, the markets have really just kind of taken a breather for 2015 and been choppy. But until we break these trend lines, I think you have to look at the market as consolidating in a longer term bullish trend. Now, that said, that doesn't mean that there aren't some concerns for short term movements. So let's just take a look at the daily for a second on these charts. All right, and I'm going to start with the SPYs because the SPYs are really at an interesting point from a trend line perspective. You can see I've got this trend line and it's a valid trend line from the highs. We come right back up to it. But the area on all these charts I think you want to focus on is the consolidation that happened in the highs in late February. And that's where the market stalled the last time they got made an attempt to move higher. We're right back up to those levels. And so this would be a good point for it to stall. And if the market is in fact weak at these high levels, then it would be natural to assume that it's not going to take out this last high here and it'll roll back over. So from a shorter term timing perspective, it should hold these recent highs that it's broken out here. This is that weekly trend line that I pointed out in the last screen. So if we get back down below there, and this magenta line is the 50, if we get back down below there, anytime we get below the 50 and below this trend line, you can get a little bit cautious. But until the trend really starts to materialize on the downside, which it has been unable to do, even when we got below the trend line recently, it's only been for a day or two, and then it's been right back up above it. So several days and some downward pressure or downward market action below this trend line, and then I think you can start looking at the 200. And then if we break the 200, then we can look at a more negative posture. But until then, I'm going to stay relatively bullish, or at least opportunistic on the bullish side. Now, if we look at the Qs have actually been acting much stronger than the SPYs in terms of holding prior highs, or I should say recapturing the prior highs. They did much better against this trend line, but that said, they're still coming up against that same basic area of resistance right here. So draw your line across these highs. Basically look at Friday's low, maybe Thursday's low, which is going to line up with the 50 as your area of support. All right, now the strongest of the indexes has been the IWMs. And if we look at how IWMs have performed relative to prior highs and lows, it really has consolidated above these February highs as opposed to the other ones that really came down under the 50 and are just coming back up to it. So there again, however, you can see that these recent highs or these recent days here have been stalling, and not without some pretty big moves to the downside for individual days against these prior highs. But if IWMs break out here and start to move higher, I think you've really got to look at this market as maybe not a rip-roaring bull market, but it's still got the bit in its teeth and it's running. Now, that all sounds well and good. However, if we look at some of the market internals, there is some reason to be suspicious that the market may be a little overdone. So let me pull in my screen that I take a look at the market internals on, and these charts are going to look pretty familiar to you in terms of what Keith usually shows, but I'm going to focus on a couple of the ones that we tend to look at. So first of all, we look at the McClellan advanced declines. And McClellan, the interesting thing about the McClellan right now is that for 2015, it has had a pattern of peaking out right about where it is at this 100 level. Now, typically we consider the 150 level as being extended, and I would continue to focus on that as extended. However, if the market starts to roll over here, and roll over again would mean breaking down through the Friday lows on a closing basis and continue to move lower, I would not look at McClellan and say, well, it didn't really get up to any level of significance. This has been a significant level, and it is significant enough to indicate that the market could sell off. It's not nearly as extended on the upside as it could be. Now keep in mind this particular example here gets extended, but it gets extended from a much lower level. So if the market were to get this extended coming from a higher level, then that would really be overbought. But that probably will take a couple weeks to happen if it were to happen. What my point here is that we're back up against some resistance here, but it's not a huge alarm. All right, the alarm is actually coming from the VIX. So when the VIX, and for those of you who watch this regularly already know this, but when the VIX here crosses under this lower Bollinger Band on the VIX, it's generally an indication that the market has moved up too far, too fast. It's a little too complacent, and will have a tendency to go sideways or even down. So if I had to point to one indicator that is really bearish, this would be it. The timing of this is not always great. However, the best bearish indicator that this could possibly have would be for us to close on Monday below the Friday low, and that in conjunction with the VIX would make me bearish. Now bearish to the tune of we should expect a test down to this level quickly. We shouldn't be surprised if it moves down to the 2000 level. That said, until we get the bearish price action, this is just a huge red flag, but it is a big red flag. It happens to be the only really big red flag I can see, but it's been a pretty reliable big red flag, especially when it's accompanied by a day where the market closes below the low of the prior day. So those two things happening in conjunction, the VIX below that Bollinger Band and a close below the low of the prior day, would be a really quick change in my tune. Until we get that, though, again, everything else seems to be in gear. All right, so let's just take a look at what's going on kind of around the globe. And part of the reason that I'm doing this in this particular session is because, yeah, well, it's really because FXI. Okay, China absolutely exploded higher. And I just did another video in this section on the website in the Little Big View section. So I'm not going to focus on China in particular. If you're interested in other ETFs that can show you how to capitalize on this huge move in China, then go look at that. That video came out at the same time. Came out this weekend as well. But China is really the impetus for me to say, okay, market outlook really should focus on some of the huge moves that have been going on in equity markets around the world. And this ties back to the US because the US is looking good right now, but it's consolidating. So is it going to consolidate and break out to the upside, or is it going to roll over? Well, if we look around the world, there's definitely money flowing into other equity markets. So China with FXI is one of them. The other one, if you don't already know this, is Europe. All right, so here is Europe hedged, so it's taking out the impact of the dollar. And 2015 has already been a banner year, up over 10% for the year. You can see this is a major breakout here. And the other index, which is the MCSI All World Index as expressed in an ETF, is just breaking out now. So if you've been to any of my recent webinars with our country ETF product, I've been emphasizing the fact for months now that this is a major consolidation, and if it breaks out, this is something you want to be paying attention to. So this is now breaking out. Again, this is an index that keeps track of, or an ETF that follows the index, keeps track of really global equity markets. And this is a massive, massive consolidation that this thing is breaking out of. It's following Europe. It's impacted by the fact that China's moving higher. So if you look at the world through this lens and then come back to the U.S., it definitely lends credence to the idea that the U.S., if it's going to follow this pattern, is more likely to break out to the upside than to roll over here. Again, we're going to pay attention to trade each market individually, but it's important, or it's incredibly powerful, to be focused on more than just our little bubble within the U.S. And it's really easy to do now if you know what ETFs to focus on. Right? So that's one way to interpret what's going on around the world. The other way is to not be so US centric and look at the optimistic side, which is if the equity markets from a global perspective here are focused on the upside or moving towards the upside, there's probably a handful of good looking patterns that may be beaten up, basing, and are in good position to be followed from the standpoint of a recovery. And so I put a couple of those, or a couple of these markets together, and that's what I'm going to share with you now. So in no particular order necessarily, let's just take a look at some countries that have good looking bases. Now, it may not exactly be the most timely time right now to enter. Monday might not be the best time, But these are some countries that are well worth watching. So here's Korea, and the reason I'm pointing this out is you have a really nice breakout of a big base here. Now it's up here against the 200, so my hope is that actually the 200 puts a lid on this, pulls back into this area, and we look for an entry in here. But this is a big base here, again, in a positive equity environment. There's plenty of room between 58 and a move back up to 66 to make some good money. Now, one ETF, full disclosure, I've been in for quite some time now is Russia, and in part because I like to look at countries that are just completely washed out and start to move kind of contrary to the news. So I probably don't have to explain all the bad things that have been happening with respect to Russia and the Ukraine for quite some time, and that's the reason for this plummet. And this very much looks like a capitulation low. This whole pattern looks like a capitulation low. And so you can see why I'd be focused on this particular breakout, why I'd be focused on this retracement. And now I focus your attention on it to look at these levels right in here. If we're fortunate enough to have it pull back all the way to the $17 range and that 50, that would be another area that would make a lot of sense for a low risk entry point. All right, so Korea, Russia. If we take a look at Taiwan, Taiwan is not necessarily a great base, but big picture, you've got the 50 coming back up over the 200. You've taken out a significant swing here, and if this can get going, you've got a nice consolidation here that could propel this higher. Right, so basically looking for nice consolidation. In this list in particular here, I was more focused on stuff that's beaten up. Taiwan kind of snuck in there because of that consolidation. So again, here's another country. We look at Singapore, where tried to flush out to the downside and bounced right back. Now it's taking out critical levels here. If it pulls back to the 50, one of my favorite patterns, a first pull back to the 50 after a long decline and a beginning to turn up 50 is a huge opportunity. And when I look at these opportunities, I look at them in the context of where we are here to prior highs. So a move from the 1280.13 level up to 14 is basically a 10% move. And for a country, that's a nice move and doesn't have the same volatility of individual stocks. So it's a completely different type of trade. This is one that you probably should pay attention to, right now, in the terms of just pulled back to the 10. The area to look for the pullback is really from where it is now down to the 1330. And so if it gets back into and above this breakout level, you've got a nice stop at wherever this low is put in. Right, you can trade these things with patterns as simple as this, and again, you can look for a target back up to the 200, or if you're a longer term viewpoint, you look at a target up over 16. So if you're a buyer at 13 and a half or a buyer at 13 and 3/4 and your target is 16, that is a nice move, which could happen over several months. It does not necessarily years. And these are trades, or at least setups, that you can sleep at night with. All right, so Mexico, same idea. Now this has been pulled down by energy, but the consolidation here is huge. This is one of those patterns that I'm sure we will look back on months from now and say, I wish I'd seen that. And now you won't be able to say that because I'm pointing it out to you. The pullback is very timely right here. If it can bounce back up, you know you've got whatever low it puts in here as a stop that you can work with. EWI. Okay, now this isn't necessarily as clean of a base as the other ones that I've been showing you, but if you look at the key levels here, all right, now it happens to line up with the 200, but the thing that is most compelling about this is, again, this is the 50-day, the magenta. We've come back up through it, and the best part about coming back up through it is it flushed everybody out after taking out the major support and came right back up. Then it comes right back up, retraces to the 50 after the 50 is finally on an up slope after a long time and resumes its uptrend. So that action right there is exactly what you're looking for to tell you that the market may have turned much longer term, and then to break out of a big base like this is even better. These aren't patterns that you have to time to the exact day. So you can see you have all this time in here, the 200's holding it down, a pullback in here. You want a nice wide stop. Your stop preferably would be under the 50. But again, I would be looking for a move over time back up to these levels. All right, so a significant move for a country, and these are trades that you don't have to be actively watching every single day during the day to profit from. So getting away from the bases that have already developed, here are a couple that are beat up and not quite sure whether or not they're turning, but they're worth looking at for or with the perspective that they might be turning. So if you follow the types of patterns that I'm looking for, this is flushed out, it's rallied back up over the 50. If it falls back below the 50 and back below this 32 level, then the downtrend is still very much intact and you don't want to be a hero here. All right, so this is the level that you look to trade against, or really just let it go. What we want to see is that it moves higher and then it pulls back and holds the 50. So this one is, I would say, a little bit premature, but why am I pointing this out? I'm pointing it out because of where I started this video, which is global equities have been breaking out, and you want to pay attention to both the leaders and the laggards. So Greece, in the news a lot. Have you been trading it? Have you been positioning it? If you have, maybe it's a little early, but this action right in here was a little bit of a disappointment, perhaps, to the markets. You had a great looking breakout here. Your 50 was still downwardly sloped. The news still very much kind of against Greece, and it came back in, and this is the exact came back under. And this is the exact pattern I just was pointing out with EWZ. You don't want to see this, but now you've got potentially a double bottom in here. So if we break above this level and above the 50, that would be a really interesting trading point with a stop below the low of the double bottom. All right, so again, premature, but worth keeping your eye on. If you like the types of trades where you enter when the news is bad, when the price action seems to be bad, but really, if you know these patterns, it's not bad. It's actually quite good from a reversal point of view. All right, so here's an interesting chart, getting back to where I started this video with, stuff that has broken out of massive consolidation. So this is Africa, and it's really a mess in terms of this chart. But the way I see this chart is that it is a complete mess until it breaks out. And if it breaks out above this 72 level, then this huge mess is one big consolidation. And it is one of those charts that you will not want to miss the breakout of. All right, so point here, if I could sum it up, US markets, hey, nothing against them. They look like they want to hang in there, that the bulls still got some legs. The VIX, or sorry, the VIX may be indicating that it's a little overdone short term. And when I say short term, could be a week or 2 week correction or flat price action. Don't expect the sell-off until the sell-off actually starts to happen. Um, it could break out and really run. One reason to believe that that could happen is the global equity markets, as I've just pointed out, have been quite buoyant. That said, take a look around the world. You've got a lot of bases that are forming that have opportunities to pick up stuff that's cheap, and there's even a few that look like they're ready to break out in a potentially big way. So, hope that gives you a different perspective on what's going on. Hope that helps. I'll probably follow up the similar theme next week. And if you're not already subscribed to Market Outlook, you can do it on this page, as well as see other videos, as I pointed out, specializing right now in the what's going on in China on this same page. If you've got any comments, you should be able to leave them right below this video. I'd love to hear them. As long as they're constructive, I'll get back to you. And with that, have a great trading week, and I hope this helps.